Hello everyone, George DeSantis here with the look at the market for the week ending October 12th, 2018. And as we usually do, I'll bring up the disclaimer here. You should read it and realize that what I do here is not to be construed as professional investment advice because I'm not a professional investment advisor. So get that from a licensed professional advisor. All right, so let's begin by looking at a weekly chart of the S&P 500. As you know, for weeks we've been looking at this bearish divergence of MACD, bearish divergence from price, and wondering, is this going to play out as a really red flag, as I pointed out some time ago? And sure enough, it played out as a red flag. Now, what did we do about it? Well, each person had to make their own choice. If you're a day trader, you traded it differently. If you're a swing trader, you traded it differently. If you're an investor, you had different options and that sort of thing. But let's look at a daily chart. And here's a daily chart. And of course, what we could see here is that on the daily chart, the 4 EMA crossed below the 9 and continue to cross below the 30 as well. So we had this breakdown of the S&P around here. Did we sell there? I didn't. I sold somewhere in here. I sold quite a bit of the stocks that I had somewhere in here. But that crossing of the 4 over the below the 9 and this crossing of the 9 below the 30 was really very instructive in terms of whether or not we ought to hang in there, get rid of some stocks, take profits, etc. So the decision was personal. So regardless of what decisions we made then, the question is, what do we do now? Well, we can see that that the S&P on the daily chart hit the 200-day moving average, closed below it, in fact, and on Friday we had a hammer. So, and it's also a harami because this body is totally engulfed by this body. So we've had some, at least pause in this downtrend here. Will it go any further? Who knows? Anybody's guess. My guess is that we're going to find support at the 200-day average. If you look back here, you'll see that in these instances, we found, when we pull back, we found support at the 200-day average, close to it here, and again here. Perhaps we'll find support here again. So if that's the case, that the S&P 500 will find support here, then we need to, of course, decide what do we do from here. If we have cash from selling some of our positions, or all of them even, then how do we get back into the market and when do we do that? Is it too risky to do it now? Maybe it is. I'm going to start making some decisions real soon, and I'll be doing some shorter term trading using the Shaken Analytics program. I'll be buying when they're oversold and selling when they're overbought. Here's a daily chart of the NASDAQ Composite Index. What we see that breakdown here, all right, the crossing of the moving averages. And now we see possible support at the 200-day moving average. Because we have what appears to be, and I think we could make a case for this being a morning star, which is a bottoming or reversal process. You have this bearish bar, you have this doji type candlestick, and now you have a hammer. So hopefully we'll find this support here at the 200-day average. The other thing I noticed is, of course, MACD histogram has shortened up on Friday, so that's encouraging. And most of these other three indicators have turned up. Well, let's hope that the NASDAQ leads the rest of the market up. But let's point out also that there is going to be a lot of overhead resistance at these levels here, anywhere from 7,600 to 78 and even 8,000. We're going to have some overhead resistance. So that's why my choice is to trade the market, individual stocks from here on in for a while. Anyway, for a while. Here's a daily chart of the VIX volatility index. Well, what I wanted to show you here is that it spiked up once more. Of course, it got close to 30, I think it is, 29 or so. And although, according to Laszlo Barini and his research outfit, the VIX is not really a good leading indicator. But what we do notice is that when the VIX spikes up and begins to come back down, that is oftentimes a good entry point for stocks when the VIX starts pulling back. So when you combine this development here with the fact that we seem to be finding support, or we hope we find support at the 200-day moving average, I think we ought to prepare a shopping list. We ought to look at that shopping list again and see what we want to prepare ourselves to trade or to buy once again. So let's take a look at some individual stocks. This one is Visa, daily chart. You can see we had that bearish divergence of MACD on the daily chart. You could see as prices made a new high, MACD made a lower high. What we have here now is that maybe we find support here at that 200-day moving average. We have this sort of morning star development here, reversal pattern, okay? So morning star, bearish, doji, bullish. And we also have MACD ticking up. So I'm going to take another look at Visa, maybe get right back in. We have a similar looking chart with Adobe. Adobe, we have this this bearish bar, we have this doji, we seem to be finding support at 200-day average, and we have a bullish bar. So Adobe looks like one that if you sold it, might be a time to get back in or to buy it for the first time, I don't know. And also we have, very similar to Visa, we have another shortening of the MACD histogram here. Here's Salesforce. These charts are almost identical. We have this they supported the 200-day average. In fact, it was a little higher up. But now we have this sort of morning star formation here, a reversal pattern. Here's a chart of Apple, daily chart, a very similar pattern. You have this reversal pattern. Hopefully, it seems to be finding support here too at this level. And you can see that even though we made a lower low here, MACD seemed to have held its own here, and it looks almost like a bullish divergence at this point here. So Apple, if you sold it, time to get back in perhaps. All these charts look so similar. Look at Microsoft, bearish candle, doji, bullish candle. And we have this sort of reversal morning star type formation, and MACD shortening up, the histogram. And these indicators are ticking up, and a lot of the other stocks seem to have been doing that. Here's MasterCard, very similar pattern, morning star formation, MACD histogram shortening up, and these other indicators ticking up. We're going to go through the list that I have of this shopping list we used some time ago, right? Here's one that I held for quite a while, but I sold it somewhere in here when it started coming down. IDXX, and you can see that it has that morning star formation here too, finding support perhaps at the 200-day moving average. Here's NVIDIA. NVIDIA dropped a little below the 200-day average, but now it seems to be attempting to rebound here, but not as convincingly as some of the other stocks. But it still looks as though it's searching for a bottom here. Netflix looks almost identical to some of the other ones we've looked at. You have this morning star formation, and you have MACD ticking up here, and these indicators also ticking up. That's Netflix. And here's Costco, daily chart. We're all daily charts now looking at. Costco fell out of bed here. It went into a trading range, and then it dropped again recently, and then it seemed to be ticking up again. And MACD shortened up here. So Costco seems to be looking to make a new run for it. And here's Ulta, the beauty company. manufacturer of beauty products, it didn't seem to pull back a whole lot and found support at the 50-day average. It seemed to be trending up from here. This one has been a good performer, you know. It really gapped, it really ran up a lot here and then it consolidated. But now it seemed to be wanting to go higher from here. So here's the ETF of FFTY. And in lockstep with what we've seen on so many of the other stocks that belong to the NASDAQ, you could see this potential reversal pattern here, this morning star formation. And I think the same thing can be said for XLK. Let's try that. Yeah, you see it's the same thing. Seem to be finding support at the 200-day average. And we seem to be wanting to go higher from here. Here's a seasonal chart of the SPDR SPX ETF. And you can see that the start date of this trend here, this uptrend, is 10/25, October 25th to December 23rd. So for about 2 months, we should get a nice rally here. And that's that usual rally into the end of the year. Well, we don't know if there are going to be any major catastrophic events internationally or whatever. But this is what the data shows. We can only look at what has happened before. We don't know what's going to happen in the future. So in summary, it seems as though what we can say then is that we had about almost a 10% correction. I think it's a little over 8 or 8.5% correction on the S&P, and perhaps larger percentages on other indices. And then the question becomes, where do we go from here? We could certainly go lower, but it does look as though we may find support here at this 200-day average. And if we do, then we should be making up a shopping list and being prepared to do some trading again, or positioning ourselves for the longer term, at least going into the end of the year. Well, folks, that's it for now. I'm going to take a break, go relax, have a nice weekend and a good week coming up.